Hello, my name's Andy Magnus. I'm a CPA, a former IRS agent, a speaker, an author, and a humorist. We're going to talk about today your tax return and so much more. So I want you to consider this for just a moment. Have we never before faced a broader range of challenges and opportunities than we have in the last 2 years? Is it time for us really to examine what we've always done, or maybe you already have? What did you learn in the last 2 years, and how does that impact the way you look at your tax return? So when we look at our tax return, for a lot of people, the tax return is just a way of satisfying the IRS. It's just a transaction. Keeping records for it is just, hey, it's just something I got to do. I did a survey and a talk I did once, and people said they kept records for the IRS more than for themselves. So how would you have treated the last 2 years differently if you'd had more current financial information? You know, what information did you use for your decisions? Well, in keeping our financial records and filing our tax returns, when we look at that, you know, we're always looking backwards. And we're looking backwards at history rather than what we can do now and what we can do in the future. So for many people, the primary concern of getting your tax return done is the cost of preparation and to pay as little tax as possible. I can't tell you how many interviews I've had with people that says, what's it going to cost me to get my tax return done? And, you know, that's not always the most useful question, you know, because most people or many people get their tax return done. What they get is a piece of paper at the end, or electronic paper as it is now. A little advice, a little time, but again, we're always looking backwards. So what could it be if you were just more than filing a tax return? So again, the cost of getting your tax return done is more than just a dollar spent, because there's frequently more than the dollars you did not receive if there's more to it than you can be using your tax return for. So I want to thank you for being here this morning. We're going to go into a lot of things today that I want you to think about. So grab a pen and paper or electronic pen and paper, as it were, and hopefully we'll give you some valuable takeaways for the time spent. My goal for today is to ask you some questions that may help raise your awareness so you can make more useful decisions for you and your business. Good or, you know, it's not good or bad decisions, just more useful decisions. So we've got to start, where are you right now in your business and in your life? You know, let's reflect on that. I would presume that your life is not perfect as you would have envisioned it when you started your business. And during the presentations, I want you to look at some things and some tools and some things that could move you closer to your perfect life, and not forgetting that we need to enjoy life as we live it now rather than just looking for the future and what we can get in the future and seeing what we've done in the past. So more than a tax return, for most people, what they've done is they're working in the past. Their financial records are in the past, their tax return is in the past, and they miss the richness that can be had by using that information that you use in gathering your tax return and using it in the present. So, you know, how would you have navigated your last 2 years if you'd had better financial information, more current financial information? You know, how does your past help you deal with what you're looking at right now? How could you improve your business? And of course, what could you achieve in the future? What are your goals and your dreams? And that will include more than just your taxes. And you want to look at, how are all your advisors working together for your future? Are they working in a vacuum? So tax decisions all too frequently are made in a vacuum. Again, you're not looking at does this tax decision also make good economic sense? You know, I've heard people emotionally say, oh gosh, you know, that's tax savings. And of course, we get so much bad information on the media that you've got to take in context. I know that's hard for most people to believe, but that is true. I mean, for instance, I've got a client that makes an emotional decision. He says, gosh, I'm going to pay my taxes with my credit card so I can get points, not realizing he's paying an extra 2.5% of his taxes in a fee to the government. What would happen if he didn't get the points and save the dollars? Have to really take some sound logic and run the numbers. And the numbers give us information on which we can make better decisions. So it's important that these numbers are current and they're accurate, and also that they make sense. They're presented in a way that you can use them. So we have an opportunity to grow and plan. So we do that by keeping good financial records, and we use those financial records to create our present time tax planning and strategies, so we can look forward to the future and collaborate with all of our professionals in creating that present and future that we want. So too often we take a look, oh gosh, I'm contributing to my IRA and my Roth and my SEP, and you're saving taxes this year. But in reality, you're not saving taxes. What you're doing is deferring taxes to another year. And we've got to look at, what does that look like in a bigger plan as opposed to just this year? What are you planning for the future years? Are you planning for your retirement? So when we're doing our tax return, it's more than just the piece of paper. So what are the other considerations that we have? You know, are you willing to consider more than just the form we send into the government? Yes, we want to look at the amount of tax, but we also want to take a look at, okay, what is our risk tolerance to being aggressive or being conservative? Is the preparer I'm using the right preparer for me? Do we think along the same lines? Do I have the right entity for what I'm wanting to do in my business? How about the managing of my business? You know, in filing a tax return, you also got to consider, will you be refinancing or buying a new home in the future? Because again, you may want to make some tax decisions that would reflect better income so that you can more qualify for a loan. You've got to take a look at planning for your growth, your asset protection, your exit strategy, all of these things that if you're just filing a tax return, you really are missing some rare opportunities, as well as your personal finances and planning, and ultimately your financial peace. So we've got to look at the present and look forward rather than not just backwards. So I want to, in determining the how aggressive and how conservative we are, Judge Learned Hand, a Supreme Court justice, and this is quoted, you'll see this quoted many places, said, anyone may arrange his affairs so his taxes shall be low as possible. He is not bound to choose that pattern which best pays the treasury. There's not even a patriotic duty to increase one's taxes. So it's going to be important then to determine what your risk tolerance is on your tax return. I have people kind of take a look before I take on a new client. I have them take a look and say, you know, what is your risk tolerance? And I use a scale of 1 to 10. 1 is very conservative. I don't want to even tip the IRS. I don't want to take any risks at all, to a 10, which says I want to be as aggressive as I possibly can without going to a 10.01. And I like to work with personally clients that are on a 7 to 10, because we actually have there's more that we can talk about. I've had people tell me, oh, Andy, I've thought about that before, but my last tax preparer told me that, that the IRS wouldn't like it. Well, in reality, who's that person working for, you or the IRS? Now, granted, they have to look at preparer penalties, but again, we have to evaluate what's the risk for us as opposed to what's the risk for you. And again, work together in a place where all of us are comfortable, because we both have to sign the return under penalty of perjury. It's true and correct to the best of our knowledge. So when you're looking at your preparer, you want to make sure what this person has is good training. They have the experience they need to meet your business. Do they understand your business well enough to be able to do a competent job on the return? You want to make sure that your risk tolerance and their risk tolerance are compatible. What other services are they willing to do they offer, and what other services do they work with other people on? And again, how accessible are they to getting back to you? So when you're filing your current tax return, it's more than just about filing that piece of paper. Again, we want to take our IRS risk tolerance, but also ask the question, what else can I deduct? I work with my clients because a lot of people ask, can I deduct it? And that's an okay question, but it only has two answers, yes or no. We use, how can I deduct it, which gives you a broader range of answers. And it all depends on how does it impact your business? Does it affect my business? And so how can I define this expenditure so it can be a deduction for me? Also we need to take a look at how transactions are structured for the best business treatment. I've been brought people have come into me and said, oh, by the way, I sold this piece of property last year. And if we'd have known about it ahead of time, we could have structured the transaction very significantly different. So it would have made a huge impact on their taxes. The other thing we look at is what and where is it on the tax return and how is it being presented? Because there's different ways to look at things and present things to where the IRS will look at them or they won't look at them, because we want to file a return that, in Star Wars terms, avoids imperial entanglement, if you would. So, and then also, when do you file the return? Most tax preparers will file them in March and April just to get them done, get them finished, and get them completed. We always take a look at filing them late, because if you file in March and April, the IRS has nothing in their pipeline to look at. But if you file in September, October, they probably, and we do our job on how to present the information on the return, they've got better things to do, to spend their time on than what you file. And also is, when do you pay your tax? And ideally you pay it no sooner than you have to, so you can let the money work for you, but not later than you can, so you avoid penalties and interest. All of those are things you want your preparer to, and your tax professional to be considering in preparing your tax return, and not just filing that piece of paper. Well, let's take a look at an example here. So if you have a tax preparer and you say, okay, my taxes are going to be $10,000, I pay $900 for that, I'm going to be paying out $10,900. That's a cheap fee. And when people come to me and said, Andy, what do you charge for a tax return? That's the number they're looking for. But in reality, there's more to it than that. What if by working with a tax professional, your taxes go down to $4,000, but you're having to pay the professional $3,500? Your total out of pocket is $7,500. So which would you rather pay, $7,500 or $10,900? It's not rocket science, folks. But wait, there's more, because on the tax professional, the $3,500 you're paying is tax deductible. So you're saving even more on that. And then if you're doing your planning, then you can certainly increase the value of what you're getting from your tax professional. And again, taxes should only be part of the discussion. You got to look at the bigger economic picture and managing your business. For instance, you want to take a look at your key performance indicators, your profits, your budgets, what trends are going on, and allow for unexpected events like we've just had in the last 2 years. If you didn't have an ongoing relationship, how did you deal with your PPP loans and your CARES Act and your EIDL? Obviously, it's better to have somebody that's not just a one-time fee, but has an ongoing relationship for you. And the person that does your taxes also needs to collaborate with your other professionals, like your bookkeeper, your CFO, your business attorney, your financial advisor, your payroll and HR, your banker, your business coach, your insurance person, your IT consultant, your real estate professional. All these go into making up your financial future. And so it's important that they talk together and they're pulling in the same direction. So often each of these people work in a vacuum, and we know what about a vacuum. A vacuum sucks. And so they shouldn't be competing with each other. They should be working with each other. And so working, we want to make sure we're not working at cross purposes, have discussions, and have a unified plan. So having all these people work together can actually free up your time and energy so you can do what you do best in your business. So I want you to take just a minute, if you would, and answer this question. Who is on your professional team that helps you manage your money and your finances and your business and your personal life? How are they currently working together? Do they look for ways they can collaborate together? If not, maybe that's something you may want to consider. So another thing we want to look at is your asset protection. Well, how do we separate our liabilities from our business from our personal assets? And how do we select our entity and make sure that we're operating our entity correctly? That the entity is not being treated like a back pocket for the personal, so that the protection of your assets is basically taken away. We want to make sure that the individual and the business are dealing with each other at arm's length. We understand, of course, the arm is only about this long, but still we have to have the appearance of independence. And then, of course, we have, who owns the assets to determine how we can best protect them, as well as separating our liabilities from our assets. So when we're looking at our future tax considerations, we want to take a look, are we saving tax, or are we just deferring it are we kicking the bucket down the road? How are we going to handle our retirement? What about estate taxes and maybe inheritance taxes? All of these require your financial professionals working together. And now how about your future planning? So you want to look at the growth of your business, your growth of your personal assets. Do you have an exit strategy? How about a retirement strategy? How about considering long-term care? These are all things that you need to consider in your business. So what is it you're currently doing to get what you really need to take you fully in the present and in the future? And so, is what you're currently paying for your tax return, are you getting an output, or would you rather spend a little more money or maybe a lot more money to get a value of strategy, collaboration, and a bigger outcome? Here's some questions for you to consider as you kind of move from this presentation and on into the future, maybe for the new year. So one of this, how are you looking at the bigger picture for you and your business right now? Are you getting the advice you need to move forward into your future? Are you getting what you currently want from what you're currently doing? How aggressive or conservative are you willing to be on your tax return? How do your taxes fit into your long-term plan? And are you looking for an output, a form, or are you looking for an outcome, which is a strategy? So for the takeaway today, what are some of the questions that you came up with that you'll consider implementing? And then what I want you to do now is consider, what's the one thing of all the things you talked about in this presentation that if you implemented it today would make the biggest impact on your quality of life for yourself and your business? I'm going to give you a second on that and think about it and write it down. And remember, all this information is great and wonderful, but implementation will be your key to success. Thank you very much for your time and attention. I hope you have an excellent year and go implement something.